Can you imagine having total control over your money instead of it controlling you? Welcome to the world of money management. It's an empowering journey that can transform your life. Today, we're going to unpack 15 essentials that will equip you with the tools to master your finances. From budgeting to diversification, from automating your savings to avoiding lifestyle inflation, we've got a lot to cover. So, strap in and let's get ready to dive into the first key of money management: budgeting. Money management basic number 1, budgeting. It's like a roadmap for your finances. Now let's delve into the heart of budgeting. It's simple, really. Budgeting is all about tracking your income and expenses, then allocating your money where it needs to go. It's like giving every dollar a job, be it for your essential expenses, savings, or that well-deserved treat at your favorite coffee shop. But why is budgeting so important, you may ask? Well, imagine embarking on a road trip without a map. You'd probably get lost, right? The same applies to your finances. Without a budget, it's easy to lose track of your money and where it's going, leading to financial stress. To create a monthly budget, first list out your income and all expenses. Then allocate funds to each category based on your needs and financial goals. Remember, the goal of budgeting is not to restrict you, but to empower you. It's about guiding your money, not handcuffing it, and that's budgeting in a nutshell. Money management basic number 2, the emergency fund. It's your financial safety net. Picture this: your car breaks down or you're hit with a sudden medical bill. Unplanned expenses are like uninvited guests. They show up when least expected. But what if you had a financial cushion to land on? That's what an emergency fund is, a stash of money set aside to cover life's unexpected expenses. It's not for holidays or shopping sprees, but for those inevitable curveballs life throws at us. So, how do you start building one? Start small, aim to save at least 3 to 6 months worth of living expenses. It might seem like a daunting task, but every little bit helps. It's like building a financial fortress, brick by brick. Are you enjoying the video so far? Don't forget to hit that subscribe button and ring the notification bell so you'll never miss any of our exciting content. Money management basic number 3, debt management. It's time to slay the debt dragon. Now, managing debt may seem daunting, but with a sound plan, you can conquer this financial beast. Let's start with a strategy called the debt snowball method. Picture a snowball rolling down a hill, gathering snow and momentum as it goes. This method involves paying off your smallest debts first, then using the satisfaction and momentum from those early victories to tackle larger debts. Alternatively, you may prefer the debt avalanche method, which focuses on clearing high-interest debts first. This can save you more money in the long run, but requires patience and discipline. Both approaches are effective, so choose the one that suits your personality and situation best. And let's not forget, consistency is key. Regular payments, no matter how small, can make a big difference over time. Remember, tackling debt is a marathon, not a sprint. Money management basic number 4, savings goals. What are you saving for? We all have dreams and ambitions: the car we want to buy, the house we want to own, the business we want to start, the places we want to travel to, or the comfortable retirement we want to enjoy. These are not just dreams, they are potential savings goals. Setting specific savings goals, whether short-term or long-term, is like setting a destination on your financial GPS. It gives you a clear vision of where you're heading, how much you need to save, and how long it will take you to get there. It creates a sense of purpose and motivation, making the act of saving more meaningful and less of a chore. Remember, a goal without a plan is just a wish, so start planning your savings journey today. Setting clear goals is the first step in turning the invisible into the visible. Money management basic number 5, automate your savings. Let's make saving money effortless. Ever thought of a world where saving money is as automatic as breathing? Well, it's possible. Automating your savings is like having a secret superpower that allows you to save without even thinking about it. It's about setting up automatic transfers from your checking account to your savings or investment accounts. No more missed opportunities to save. No more relying on willpower. Just pure, consistent growth. It's like having your own personal finance butler, diligently working behind the scenes to ensure your future is secure. And the good news? It's not rocket science. Most banks and financial institutions today offer easy solutions to set up these automatic transfers. So why wait? Start today and let your money work for you, even when you're sleeping. Remember, the easiest way to save is when you don't have to think about it. Money management basic number 6, investing. It's time to make your money work for you. Investing is about more than just hoping for the best. It's about understanding your options and making informed decisions. You've got a whole array of investment vehicles at your disposal, from stocks and bonds to mutual funds and ETFs. But how do you choose? Well, that's where your risk tolerance and investment goals come into play. Risk tolerance is all about how much potential loss you can stomach. If a minor dip in the market makes you lose sleep, you might be more risk-averse. On the other hand, if you're comfortable with a roller coaster ride for potentially higher returns, you might have a higher risk tolerance. Your investment goals are what you're aiming to achieve with your investments. Are you saving for retirement, a down payment on a house, or maybe your child's college education? If you enjoyed this part, click the like button. Your support is much appreciated. Money management basic number 7, diversification. Don't put all your eggs in one basket. Let's talk about diversification. It's a bit like a buffet. You wouldn't load your plate with just one dish, would you? No, you want a bit of everything. The same principle applies to your investment portfolio. By spreading your investments across a variety of assets like stocks, bonds, real estate, and even different sectors and countries, you reduce the risk of a single investment sinking your ship. Think of it this way. If you invest everything in tech stocks and the tech industry takes a hit, your entire portfolio takes a hit. But if you've spread your investments, a downfall in one sector won't wipe you out. You've got other investments to keep your portfolio afloat. So, the key takeaway here is to spread your investments. It's like planting seeds in different soils, hoping at least some of them will sprout and grow. Remember, diversification is the financial equivalent of, don't put all your eggs in one basket. Money management basic number 8, asset allocation. It's all about balance. Just like how you wouldn't put all your eggs in one basket, you wouldn't want to put all your money into one type of investment. This is the core principle behind asset allocation. Asset allocation is the strategy of dividing your investments among different asset classes such as stocks, bonds, and cash equivalents. The key is to balance the risk and reward by adjusting the percentage of each asset in your investment portfolio based on your specific goals, your investment time horizon, and your risk tolerance. If you're a risk taker aiming for higher returns and have a longer-term investment horizon, you might lean more towards stocks. On the other hand, if you're more conservative and you're investing over a shorter term, bonds and cash equivalents could be your go-to. But remember, there's no one-size-fits-all approach to asset allocation. It's a personal decision that should reflect your financial objectives and comfort level with risk. So remember, asset allocation is not about perfection, it's about balance. Money management, basic number 9, retirement planning. Because someday, you'll want to kick back and relax. Now, we all love the idea of an endless vacation, but to make that happen, we need to start planning for retirement as early as possible. It's like planting a tree. The earlier you plant it, the sooner you'll enjoy the shade. Saving for retirement isn't a sprint, it's a marathon. It's a long-term commitment, but the rewards are well worth it. Think about it, you're essentially securing your own future comfort. You may wonder, where do I start? Well, one great place is employer-sponsored retirement plans like the 401(k). These plans are a fantastic way to automatically save a portion of your income, often with the added benefit of employer matching. It's like getting free money. Remember, the best time to plan for retirement was yesterday. The second best time is now. So, let's get planning, folks. Money management basic number 10, insurance. Because life happens. It's the rainy day fund you hope you'll never need, but you'll be glad you have. Insurance is all about protection. It's a safety net for your finances when life throws you a curveball, be it a health hiccup, a fender bender, or a tree that decides your living room needs more natural light. Health insurance, life insurance, auto insurance, homeowners or renters insurance, they all serve a crucial role in your financial plan. They help shield you and your assets from unexpected costs that could derail your money management goals. It's not just about protecting your bank account, but also about providing peace of mind. Knowing that if something does happen, you're not alone. You're backed by a policy that's ready to step in and help out. Remember, insurance is not about predicting the future, it's about preparing for it. Money management basic number 11, financial education. Knowledge is power. When it comes to personal finance, there's no such thing as being too informed. The financial world is always evolving, and it's important to stay on top of these changes. Whether it's budgeting or investing, taxes or retirement planning, there's always something new to learn. And the great news? There's a wealth of resources out there to help you expand your financial knowledge. From books to blogs, online courses to podcasts, the world of financial education is at your fingertips. But remember, education isn't just about accumulating knowledge, it's about using what you know to make informed decisions. It's about understanding your financial situation, setting realistic goals, and creating a plan to achieve them. So keep learning, keep growing, and keep striving to improve your financial literacy. Because when it comes to managing your money, knowledge really is power. Remember, the more you learn, the more you earn. Money Management Basic number 12, Regular Review. Keep your finances in check. Think of it like a car's maintenance check. You wouldn't just drive it forever without checking the oil or tire pressure, would you? Similarly, your financial health requires regular checkups. It's crucial to review your financial situation routinely, just like you do with your health. Is your budget still working for you? Are you getting closer to your savings goals? How about your investments? Are they performing as expected, or do you need to make some tweaks? Maybe your income or expenses have changed and you need to adjust your budget accordingly. And let's not forget about reassessing your debt management strategy. Perhaps it's time to speed up the debt snowball or shift some things around in your debt avalanche. Regular reviews allow you to make these necessary adjustments and stay on top of your financial game. Remember, a regular review keeps you in charge of your financial journey. Money Management Basic number 13, Avoiding Lifestyle Inflation. More money, same lifestyle. Intriguing, isn't it? Well, let's dive deep. Lifestyle inflation refers to the phenomenon where your expenditure rises in tandem with your income. You earn more, you spend more. It's an easy trap to fall into, but a hard one to crawl out of. So how do we dodge this pitfall? The trick lies in maintaining your current standard of living, even as your paycheck gets heavier. Sure, it's tempting to splurge on that fancy car or deluxe vacation. However, the key is to resist that urge and instead channel the extra dough towards your savings or investments. It's like giving your future self a high five. And who doesn't love a good high five? So next time that pay rise comes in, remember to keep your lifestyle in check. Because remember, it's not about how much money you make, it's about how much you keep. Money Management Basic number 14, Seeking Professional Advice. While we can learn a lot on our own, sometimes we all need a little help. Consulting with a financial advisor or planner can provide valuable insights into managing your finances. These professionals are trained to understand the complexities of the financial world, and they can help develop a comprehensive financial plan tailored to your individual needs and goals. They can guide you through the process of buying a home, saving for your children's education, and planning for retirement. They can also help you navigate complex financial situations, such as managing an inheritance or developing a tax-efficient investment strategy, so don't hesitate to seek professional advice when you need it. Remember, it's okay to ask for help. Your financial journey doesn't have to be a solo trip. Seek guidance when you need it, and keep learning and growing on your path to financial independence. Money Management Basic number 15, Estate Planning. It's all about leaving a legacy. One integral part of financial management that is often overlooked is the creation of an estate plan. An estate plan ensures that your assets are distributed according to your wishes after your demise. It's not just for the wealthy, it's for everyone who wants to leave a legacy. Elements of estate planning include drafting a will, which serves as a blueprint of how you want your assets to be distributed. You can also establish trusts, which can provide tax benefits and more control over how your assets are used. Don't forget to designate beneficiaries for retirement accounts and insurance policies. These designations supersede your will, so keep them updated. Consider estate planning as part of your comprehensive financial management. It's not just about planning for your future, but also ensuring that your loved ones are taken care of after you're gone. Remember, estate planning is not just for the wealthy, it's for everyone who wants to leave a legacy. So start planning today. Your future self and your loved ones will thank you. We've covered a lot of ground today, and it's crucial to remember that the journey to financial independence is a marathon, not a sprint. We've discussed the importance of budgeting and tracking your income and expenses, establishing an emergency fund for unexpected expenses, winning the debt battle, and the significance of starting early with retirement planning. We've also delved into the world of investing, diversification, asset allocation, and insurance. We've highlighted the importance of financial education, regular review, avoiding lifestyle inflation, seeking professional advice, and estate planning. It's a lot to take in, but remember, financial independence isn't achieved overnight. Thank you for watching. Don't forget to check out our other videos that can help you achieve your financial goals. Remember to like, share, comment, and subscribe. Until next time, happy saving.